Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everybody, awesome when a strategy and game plan works out. So let's break it down looking at the gold daily, weekly, shorter term time frames. Then we'll look at the miners. The move in the miners today was based on the market and based on oil, not based on the movement of gold. That's why it's important to have your head wrapped around everything that's going on. I'm watching SPY down to the tick. I'm watching oil down to the tick because of the strong correlation between the two. Check out the SPY video I just did to see what I'm talking about. But looking at gold, you can see a big red day. So why did miners explode? Because oil exploded and then the market exploded because of the correlation between the two. So we've got gold still pulling back, trying to form a higher low compared to these low 1300s where we're finding support. The weekly time frame, still nothing really to see here for the gold bulls. And that's because the hourly time frame is still in a lower high and lower low downtrend. We did have a nice bullish reversal hammer from oversold conditions, and we are seeing a little bit of an upside. But unless we get above 1331.95, this candlestick right here, that bounce high attempt, I'm not trusting the gold bulls to turn things around just yet. We have a bullish reversal 4-hour candlestick. We have not confirmed one since the sideways consolidation turned into downward consolidation. And we need to confirm some 4-hour bullish reversal candlesticks, see a bullish MACD cross, and start taking out some of these lower highs. So again, this move is not based on gold today. It is based on the market, and check out that video. So let's now look at the miners. I have been harping on choosing JNUG over NUGT. That shifted today. I liked NUGT better, and I played this move with NUGT calls. I'll break down my trade a little bit here in a minute. And why I like it better is this daily chart. Higher low pattern, very clear. 1715, 1737, 1771. So nothing is set in stone. Correlations change, and being able to agilely, there's a word, being able to move agile from one position to the other, flip and change based on what you're seeing is very important. So a very big bullish candlestick, rejected from the middle Bollinger Band, 2028. The bulls still have work to do. Very clear lower highs, very clear higher lows. The pattern is tightening, and we don't have a clear break yet. Oil saw the same thing on the daily time frame and is on the verge of a bullish break, not exactly clear. And again, I'll cover that in the oil video. I'm getting off track here. This is where my confidence came from. NUGT weekly time frame, bouncing off the 100-week moving average support 4 times recently and bouncing right off of it at the low this week. So a bullish hammer is forming. We need some further upside. We need to get over this middle Bollinger Band resistance of 24.25. But let's break it down and look at today and that bullish signal that I've been talking about for the past 3 days. So the 20-period 5-minute, make that the 20-period hourly resistance. Look at these rejections. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You get the idea. 15, almost 20 rejections in the past 3 days, including 5 rejections pre-market and today. The bullish signal was given, and it was a perfect heads up. Here's your signal. This candlestick for me on Fidelity closed at 1:30 p.m. Eastern, so we could anticipate a little bit before the close what was coming, knowing we would close above that level. There's your bullish entry signal. Now, I made this bullish, or this call, and I was looking for a long-term swing position. I was not expecting an explosion to the upside, and the stars just really aligned. Bullish entry signal, explosion to the upside when oil exploded, and SPY followed with it. So the market running led to a huge move in the miners, and we're looking great here. We rejected from the 100-period hourly resistance of 2031, but we held back tests of the 200-period hourly support for 2 hours at 1952, and this looks like a bull flag for continuation to the upside heading into tomorrow. If we lose this 200-period hourly support, it will be a red flag that we will see some further consolidation, so keep an eye on that level. And here's another reason. I saw the daily charts. I don't believe I looked at NUGT yet, or make that JNUG. This is why I didn't like JNUG as much as NUGT. The daily had a lower low. So we had our low, higher low, and NUGT kept another higher low. JNUG did not. So I didn't like that. I like the clean, crisp look of NUGT's higher lows. We're also a lot closer to a bearish MACD cross here than NUGT is. And again, on the weekly, remember that NUGT 100-week moving average support propping the price up. We don't have any moving average support here on JNUG. So, and now looking at the hourly, we see NUGT, clear rejection, clear support, clear hourly channel we find ourselves in. JNUG rejecting from resistance, no moving average support like we're seeing on NUGT, and we don't have that 200 period support on the hourly like we do on NUGT. So that's another reason, as soon as I saw that, that doubled my confidence in NUGT and had me hold off on JNUG for today. So let's break it down even further. Let's go down to the 5-minute chart and see how it played out. So we had a couple signals here on the 5-minute chart as well. We had a tightening range forming with resistance at 1680. Let's actually look at NUGT, and I'll go over my trades here. NUGT, we had resistance here at the 100 and 200 period 5-minute. There's a rejection, 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 turned it into support. Bullish signal on the hourly was given 5 minutes later here at 1:30, and then explosion to the upside. So I was beginning, and I actually was making my biggest options purchase I've ever made in these bull miners at the 1:20 to 1:30 p.m. Eastern time frame. And I was looking at a couple weeklies. I grabbed my position of weeklies, got filled on that, and then I was looking to go even bigger into next week. And unfortunately, that did not fill before the price ran away. So I wasn't chasing this move to the upside. I was happy that I had weekly calls that exploded. I sold it on, I believe, the candlestick before the top candlestick. And that was a quick 45% gain in 30 minutes. I'll take that every time and then reassess the situation and look for another entry. So I am looking for another longer-term bullish entry for next week calls. I'll see if I can pick my spot tomorrow. And there was another bullish trade I made. I was looking at NUGT again on the pullback. Seeing the pullback on decreasing bearish volume, I was anticipating a bounce off the 8-period exponential support. So I entered NUGT next week calls again. Normally, if I was looking for a day trade, I would take this week's calls, because why pay for premium if you're not going to be using it on those options? And again, if this option talk doesn't make sense to you, I believe there's a little link that flashes up in these videos about our option webinar. Otherwise, check out my Facebook page. Really simple 40-minute intro to options to help explain this. And again, 45% in a half an hour, you can't see those gains trading common shares. So I made a bullish entry here at about 1961 or so on this pullback. And then I was looking for potential continuation in higher highs, in which case I would have swung it overnight and held it more long term. Didn't like the action after we saw a little toppy action here, and I exited for maybe 6% move. Didn't want to give back any of my previous gains. Added a couple $100 and then was done with it. And I'm going to reassess everything tomorrow and be looking for a longer term bullish entry. But I want some more confidence in gold. I want gold to start forming some higher lows and higher highs on the hourly. If gold turns things around, we're going to see these miners really perform in a bull market. And we obviously need SPY to continue bullish to remain a bull market. But there's so many things to be watching. We're also watching the dollar in relation to gold. The dollar on the 4-hour chart has rejected from 95.60 multiple times. That's a very clear resistance level. If the dollar continues to show weakness, we will look for the bulls to show up in gold. So you need to have your head wrapped around SPY, oil, the dollar, and gold, in my opinion, if you want to be trading these miners successfully. So nice bull move, looking for continuation, looking for a re-entry tomorrow. I appreciate you watching. Hopefully there's some helpful info here. And again, check out that options webinar if you haven't seen it yet. Have a great day. See you tomorrow.